And in our top business story, Dubai International Airport welcomed 5.9 million passengers in June, according to a monthly traffic report issued by its operator Dubai Airports today. Passenger traffic during June increased 16.7% to 5,914,671 compared to 5,067,726 during the same month in 2014. The year-to-date traffic surged 10.4% to reach 38,299,291 compared to 34,676,090 during the first half of 2014. The increase in traffic during June, according to Dubai Airports, can be attributed to the runway refurbishment project between May and July last year, during which the airport was reduced to a single runway operation. The surge in traffic was countered by a drop in number of passengers during the holy month of Ramadan, which fell in June this year. Regionally traditional markets such as the Indian subcontinent and the GCC region led the growth, followed by Western Europe, Africa and North America. Dubai International recorded total aircraft movements of 32,114, which was up by 45.8%. Freight volumes also increased 17.2% to 217,896 tons. DP World has announced the start of construction work on a new container terminal at Jebel Ali Port, which, according to the company's chairman, is a response to the need for more capacity at the port to cater to an expected increase in trade in the run-up to Expo 2020. Phase 1 of the Container Terminal 4 project will deliver a new capacity of 3.1 million 20-foot equivalent units by 2018, taking Jebel Ali Port's total capacity to 22.1 million TEU. The port complex will also be equipped with at least 110 cranes with a total quay length of around 11,000 meters. According to a company statement, T4 will be located on a reclaimed island north of the existing Terminal 2, allowing DP World to further expand capacity to a total of 7.8 million TEU, in line with the market demand. As part of the project, a bridge is being built to provide access to the island from land near Terminal 2, with work being scheduled to get the 3,000-meter causeway and bridge partially open to traffic before the end of 2015. His Excellency Sultan Ahmed bin Sulayem, chairman of DP World, was quoted as saying that despite the addition of 2 million TEU's capacity in Terminal 3, scheduled in the second half of this year, the port still experiences high levels of utilization. His Excellency added that with the continued expansion, the company is ensuring that its flagship asset in Dubai continues to have sufficient capacity to serve the future growth demand of the UAE and the wider region. Telecom operator Etisalat's second quarter net profit after royalty fell to 1.5 billion dirhams as forex losses and troubles from other subsidiaries hit earnings. Net profit was down 40% from 2.5 billion dirhams a year earlier, according to calculations. While the company did not provide comparative figures, previous financial statements showed Etisalat made a profit of 2.51 billion dirhams in the second quarter of 2014. Etisalat attributed the drop in second quarter profit to higher depreciation and amortization charges, the impact of Mobile's additional provision for accounts receivables, higher net finance costs and incurring forex losses during the period against forex gains in the same period last year. Last month, Etisalat said it would take a hit of 616 million dirhams before federal royalty as accounting changes at Mobile, its Saudi unit, increased its losses for last year. Etisalat's consolidated revenue was at 13.3 billion dirhams for the second quarter, representing a 6% increase year-on-year. In the UAE, revenue for the second quarter grew by 9% year-on-year to 7.5 billion dirhams. In the UAE market, Etisalat's subscriber base was 11.3 million in the second quarter. On a group level, Etisalat's total subscriber base reached 168 million, with the company operating in 19 countries across the Middle East, Africa and Asia, including Morocco, Egypt, Saudi Arabia and Nigeria. A new report by global real estate consultancy firm CBRE has shown that average residential rentals in Abu Dhabi have seen sustained growth, with the trend during the quarter continuing. According to the firm's Q2 2015 Abu Dhabi Market View, residential rentals increased by just over 1%. It was, however, the lowest quarterly rise in 2 years. In annual terms, rental growth still looks substantial, according to CBRE, at around 10% growth, reflecting the relative strength of the market during 2014. Luxury apartment residences within master-planned communities remain in strong demand due to relatively limited new supply, equating to a 14% increase in rental levels during the past year alone. Within the mainland region, Al Rif downtown has emerged as one of the preferred communities, achieving rental growth of 3%, which was significantly higher than the 1% increase in the wider market from the preceding quarter. Other similar types of residences within the mainland region were found to be priced substantially lower, as much as 15% to 20%.